This is the MTPredictor weekly update for August 14th. So here's our daily Dow. Actually, this is the Dow Mini S&P contract. Let's just take a look at where we are here. We had a major wave 3 pattern down. Here's our wave 3 support area. You see the market found that support in that area. We had some high volume spikes here. Telling us that as the market was selling off, that buyers were stepping in. And a point to be made here is, you see on CNBC the institutions talking about, there are big buyers in here and so forth. Well, take that with a grain of salt, because understand that they were probably short and also buying to close their short position, and not necessarily buying to get long. So just a point to be made there. There was buying in here, maybe a lot of short positions being closed. Therefore, we get a bottom in. I painted had the software paint in the wave 4 resistance area, so we went wave 3 down. We should work our way into this wave 4 resistance area. If we can get this, the Dow futures and the Dow itself to close above the prior closes here on the August 4th and August 5th. Closes there were 11,402 and 11,371. So if we can get a close above those areas, then they may test again this 200-day moving average, which will still basically be in the wave 4. May get a wick up into there, and then we've got the potential to roll over again, which would be wave 5 down, taking out the wave 3 low here. The reason is we've got our STF is still showing strength to the downside. So even though they may retrace, this thing may roll over again and we'd have wave 5 down. So don't get complacent. We've had an area of kind of consolidation here. We've had some big move days, down, up, and then Friday they managed to kind of hold up and close right around the highs of the previous few days. We'll see if they can continue to make progress. A lot of this stuff hinges on, stuff that comes out overseas has kind of been overruling some of the slightly better than expected economic data, with the exception, of course, of consumer sentiment, which was weak, and may affect the GDP forecasts as well going forward. But we're due for a bounce. After wave 3, we get a retracement into wave 4, and then if this STF is still strong, things may roll over again and go wave 5 down. So the worst may not be over yet. If they do close back above the 200-day moving average, if we start closing above the 200-day, okay, then that would be more bullish than bearish, and maybe they're out of the woods, but we're not there yet. Let's take a look. Well, we can look at the weekly S&P. Again, I drew this on here because, from if you look at patterns, we had the head and shoulders, your left shoulder, your head, and your right shoulder here, which was our wave 2 in Elliott wave terms, down to wave 3 here. But the head and shoulders pattern is a measured move from the top of the head to the neckline. You measure that same distance to get your target, and that's basically where we went on the move once the neckline broke. In Elliott wave terms, we went wave 3 down. If you're a head and shoulders pattern trader, then it was basically a move, measured move from the top of the head to the neckline, equidistant, and there's your target for that. So again, we should get a bounce here. Let's just look for up wave 4. Click once here at 2 and then once at 3. Here's our wave 4. Our wave 4 resistance area on the weekly S&P. All right, let's take a look at Goldman Sachs. Okay, Goldman did take out that major DP support here, and so that is definitely a negative for the market. Okay, not saying that we can't retrace some of this, but the fact that the banks did break that support, okay, is a negative event. We'll look at the BKX, and I gave you the number. I think it was last week. That number of 40. I think it was if they took out 40.76, so 40.75. If they traded at 40.75, then that would be definitely a bearish event. And target for that is down in this area, which is around the $26 area, 26.50, somewhere in there. So they closed last week 37.72 on the BKX, the banking index. But definitely a bearish event for that. So that's why we got to keep an eye on the markets, that the worst may not be over yet. We do expect maybe some consolidation to positive bias for the next week anyway, and then we'll reevaluate, again subject to whatever comes out of Europe. That will take precedence, so things can change pretty quickly. And then finally we'll look at let's look at oil first here. We had our TS3 sell signal. It did get to the target and actually took the target out. You see there's still strength on the STF, so we may get we did get begin to get a retracement off the lows there, and then so we did get this retracement here off the lows. We'll see how that goes, how much further they do, but their STF is still strong, so there may be more downside ahead there in oil. We'll see where that retracement can get to. And then gold, there's a major ABC pattern that they did close above that wave C resistance area, and then close back inside of it on Friday. Your next, again, major support is going to be this decision point just below, right around the area of the 200-day moving average, somewhere around that 1450 area. Okay, that would be a major support there. We'll see if gold continues to correct a bit from those all-time highs here. We'll see how deep that can be. It may be to the 50-day or above the 50-day. You know, maybe similar to it did back in here or in here. Because our STF is strong, telling us there may be more upside. Well, actually, it was strong back in here, telling us there was more upside ahead. We did get more upside. Now we'll see if it's peaking out, and we'll kind of soften off back here, or if we do get another leg, if this continues to stay strong. So we'll see how that goes. In silver, it has been stuck in the wave 2 or B kind of resistance area. Your next major support is going to be down here at the DP support off the prior swing here, which would put us right around about $31 or so in the silver market. And so we'll have to see. Like I said, they're kind of stuck in this area, consolidated a bit last week, and we'll see if they continue to lose ground. If they do take this wave 2 or B area out, to kind of take out that $46 area, then we'll probably see new highs in silver. And your next resistance is going to be around $52. That would be all new all-time highs here. And finally, the dollar. Again, it's still just consolidating in this range. You know, it's had some nice up moves and sell-offs last week. Your next resistance again. Well, actually, we can put a new one in based on last week's trading here. So you can have some kind of smaller support area right around 75.50, 75.60 area. And the support and resistance area is kind of getting smaller as we go here, and the support area is sitting around 73.20 area. Closed Friday at 74.60. All right, so we'll see if that If it comes up into those areas, should find resistance and support there. Here's your next, bigger areas of support and resistance outside of those. So keep those areas in mind on your chart. And we'll see what things look like when we come back next week, and we'll take a peek at these markets and see what's going on. So just keep in mind we should get some, we should get a maybe neutral to kind of positive bias, I think, now that we kind of made this initial bottom, but the STF is still strong. So we'll see if we get a retracement in this wave 4 area, maybe test the 200-day moving average, we'll see. And then the danger is we roll over again, get wave 5 down. All right, have a great week, and we'll see you back next Sunday night.